Ladies and gentlemen, good day and welcome to Vijaya Diagnostics Ltd. Q1FY27 earnings conference call, hosted by JM Financial Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Abin Benny from JM Financial Ltd. Thank you, and over to you, sir.
Thank you, and good morning, everyone. I'm Abin Benny, and on behalf of JM Financial, I would like to extend a warm welcome to all of you on the first quarter FY27 earnings call of Vijaya Diagnostics Ltd. At the outset, I would like to thank the management of Vijaya Diagnostics for giving us the opportunity to host the call. We look forward to having an engaging and insightful discussion on the company's quarterly performance and the outlook. From the company, we have with us today Ms. Suprita Reddy, Managing Director and Chief Executive Officer, Mr. Narasimha Raju, Chief Financial Officer, Mr. Dhiren Gala, Head Investor Relations and Corporate Development. With that, I would now like to hand over the call to the management for their opening remarks. Over to you, ma'am.
Thank you, Amay, for hosting the call. Good morning, and thank you all for joining us on the call today. Before I move on to a detailed business update, I would first like to welcome Raju back, who's rejoined as our Chief Financial Officer, and I'm sure he doesn't need any introduction to the investor community. Moving on to the business update, I'm pleased to start on a positive note as we delivered a solid year-on-year revenue growth of approximately 22.8%, supported by volume growth of nearly 16.5% in Q1FY27. Coming to PH, we're very happy to inform that we have delivered year-on-year growth of approximately 18%, primarily driven by network expansion. Happy to announce that during the quarter, we also added one hub center in Gachibowli, Hyderabad, with a 160-slide cardiac CT with superior infrastructure. During the quarter, we further expanded our network with the successful commissioning of 4 spokes across Hyderabad, AP, and Pune. In July, we added another 2 spokes. I'm pleased to announce that in July, we also commissioned our flagship hub in Bengaluru, located at JP Nagar, where we have introduced advanced imaging technologies, including a digital PET CT with an inbuilt cardiac CT, and also a 75-centimeter wide-bore 3T Omega MR. The 75-centimeter ultra-wide-bore design allows a parent to remain directly inside the gantry with the child, ensuring maximum comfort, eliminating anxiety. It also enhances comfort for a lot of claustrophobic as well as bariatric customers. The hub also houses a full-fledged state-of-the-art automated lab, which will serve as a central lab facility for our Bengaluru network. Our CapEx plan includes commissioning another 9 hub centers and 10 to 12 spoke centers, out of which we have already commissioned 2 hubs and 6 spokes till date. We will be continuing our efforts to strengthen the technical and mid-senior level leadership team across our network to help scale in a sustainable manner. With that, I now hand over to Raju to walk you through the operational and financial highlights. Thank you.
Thank you, ma'am. Good morning and a warm welcome to everyone. It's a pleasure to be back to the Vijaya family, and I look forward to meeting you soon. Now I will take you through the financial performance and key developments for the quarter ended June 30th, 2026. The consolidated revenue, the current 131 crore, reflecting a strong revenue growth rate of 22.8% year-on-year, and this strong revenue growth was again driven by test volume growth of 16.5% year-on-year. Balanced growth was due to change in the test mix and increase in realization. Hyderabad continued to outperform, maintaining its strong growth momentum at 17% year-on-year revenue growth. Pune also delivered 18% growth year-on-year. Coming to the geography-wise revenue contribution for the quarter, Hyderabad contributed 67%, rest of AP Telangana contributed 20%, Pune 6%, West Bengal 4%, and the rest of the geographies contributed 3%. During the current quarter, the revenue growth has been driven by both radiology and pathology segments, reflecting the robustness of our B2C-focused integrated business model. The B2C revenue stood healthy at 92%. Our radiology business stood at 37%. The revenue per test and revenue per footfall stood at 503 rupees and 1860 rupees respectively during the current quarter. EBITDA for the current quarter stood at 98 crore as compared to 74 crore in the corresponding quarter in the previous year, reflecting a year-on-year growth rate of 34%. The EBITDA margin stood healthy at 42.7% in the current quarter with an improvement of 360 basis points year-on-year. The profit after tax for the current quarter stood at 53 crore, reflecting a growth of 37.6%, and the PAT margin also stood healthy at 23%. As you are aware, we commissioned 10 hub centers during the previous year, and the pace at which most of these hubs have ramped up has exceeded our own expectations. The momentum has continued into their second year as well, with pathology revenues now beginning to scale alongside the radiology. This strong execution has given us the confidence to deepen our presence in these new markets and replicate the expansion strategy demonstrated last year. Accordingly, we plan to commission 9 hub centers, 10 to 12 spoke centers, and our state-of-the-art Panjagutta reference laboratory. In addition, we intend to acquire land in one of the Andhra Pradesh key medical hubs for setting up of another hub center for future expansion plans, with an estimated investment of 8 to 10 crore. Overall, we expect our capex to be approximately 190 to 195 crore for this expansion. We continue to maintain a strong balance sheet with a surplus cash position of approximately 330 crore, consistent cash PAT generation of close to 26 to 27%, and a healthy return ratio. This resilient financial foundation enables us to pursue our expansion strategy with confidence and maintaining a disciplined approach to capital allocation. That's all from my side. I would now request the moderator to open the line for the Q&A. Thank you.
Thank you very much, sir. We will begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. A reminder to all participants, if you wish to ask any question, you may press star and 1. We have a first question from the line of Siddharth K. from Tusk Investments. Please go ahead.
Yeah, good morning, everyone. Ma'am, my first question is regarding the number of centers. As of Q1, the total number of centers is 166. So could you just give us a breakup between this, how many hub, how many spokes, and does this include collection center as well?
Hi, Siddharth. So in the total of 166 centers, we have 51 hubs and 115 spokes with approximately 26 processing units.
So the 26 processing is a part of the 166 number, right?
Yes. So
and this
most
is
of
pure.
these processing centers are part of the hub centers, and these act as the cluster labs to process all of those samples across those geographies.
Okay. So then, ma'am, when we say collection centers, don't we have any collection center number? Or just
No,
pure?
we don't do plain collection center formats at all. So the smallest center will also have ECG or X-ray. So all of those centers put together come in the spokes of 150.
Got it. And the acquisition from the Pune PH Diagnostic, though it had 12 collection centers, so that also had the spokes model with the ECG and...
So the 12 collection centers of PH after acquisition also gradually have been upgraded, and most of them have added some amount of imaging and cardiology into it.
Okay, ma'am. And now my second question is regarding the capex. The 2 hub centers that we commissioned this quarter, what was the combined capex for the 2 hub centers?
And let Raju take that.
Yeah. Hello. Hi, Siddharth. As we mentioned, in the current quarter, we commissioned 2 hubs, one in Bangalore, the state-of-the-art hub center with 3 Tesla whiteboard, okay, and also we installed a digital PET CT with an inbuilt cardiac CT as well. And also, we have added the state-of-the-art laboratory as well, which will act as a central lab for the entire Bangalore region. Okay. So for this center, the estimated capex was approximately 30 crore rupees, what we incurred in the current quarter. And the second hub center, what we opened is in our core geography in Hyderabad at Gachibowli. Again, it's at a prominent location which is close to the financial district and high-tech city. Okay, to suit to this location, we also have done slightly superior infrastructure as well at this center, and this center has also got 160 slice cardiac CT as well in this hub center, apart from the basic radiology equipment like ECG, X-ray, ultrasound, mammography, etc. So the capex for this center was 9 crore rupees in the current quarter what we incurred.
Okay. Thank you so much. I will get back to the queue.
Yeah, sure.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We have our next question from the line of Abdul Qadir from Puranwar from ICICI Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, just wanted to understand in your opening remarks you mentioned about doing a capex of close to 95 crores and getting some land. So what exactly are we doing there? If you can elaborate, it would be helpful.
Yeah, sure, Abdul. Okay, as mentioned, in the next 12 months, we are planning to add, close to 9 hub centers and 10 to 12 spoke centers, out of which we already, added 2 hub centers as of now, and also coming to the spokes, we added 6 spokes across our network. Okay, so also further, we're also planning to set up a hub center at one of the key tier 2 locations in Andhra Pradesh as well. Okay, so there, since we're not able to secure a lease location, we might invest 8 to 10 crore rupees to purchase a land to set up another state-of-the-art hub center, which will be close to medical facilities over there. Okay, so the overall capex is 190 crore is the estimate, Abdul, out of which, as I said, the major capex is towards the JP Nagar Bangalore facility, which we incur 30 crore rupees, and the balance, 8 hubs will be in the range of 15 to 16 crore rupees will be the capex for the other hub centers. And also, as mentioned in the last call, we're also setting up a state-of-the-art reference laboratory in Panjagutta. Okay, so the capex for this lab is also included in this overall capex of 190 crore rupees.
So, just to add to what, as you're aware, we commissioned 10 hub centers during the previous year, and the pace at which most of the hubs have ramped up has exceeded our own expectations. The momentum has also continued in the second year as well, with now pathology revenues scaling alongside radiology. So this strong execution has given us the confidence to deepen our presence in these markets and replicate the same expansion strategy which was demonstrated last year.
Sure, sir. Well understood. And second one on Pune. So if I look at your Pune growth, it's close to 23%, while PH's, growth rate has improved. But if you have to understand directionally, then, in what in frame, if you could help us, mark that PH will start growing in line with what your average growth in Pune, currently is?
So, Abdul, just to correct one data point, the Pune geography in the current quarter grew at close to 18%, from close to 10.8 crore to 12.8 crore rupees. And, and also in the coming 12 months, we're also planning to add, 2 more hub centers as well. And also we have plans to add few more spokes in that network. So definitely we expect that, the growth momentum will continue in Pune geography.
Sure, sir. Understood. And a final one, if I may. So on margins, so, this quarter, margins were quite significantly elevated. And given the expansion plan, what you have, would you still guide for around 40% kind of EBITDA margin range?
Yes, Abdul. Since the existing cluster, okay, have been growing at a very good rate, okay, the operating leverage is being played out. Okay, so that's the reason why we could achieve this healthy EBITDA margins of 42.5% in spite of we adding last year close to 10 hubs. Okay, the drag, if any, from those 10 hubs would have been close to like a 0.5%. Okay, but because of the operating leverage that we're getting from the existing clusters, example like, okay, Hyderabad geography grew at healthy 17%. Okay, so because of this, the operating leverage is playing out every quarter, and that is helping us to get this above 40%. So even if you get like a 42.5%, even if there's a drag from the future expansion, another 1.5%, we are fairly confident of achieving above 40% EBITDA margin.
Understood, sir. Thank you, and get back in the queue.
Okay.
Thank you. We have our next question from the line of Anshul Agarwal from MK Global. Please go ahead.
Hi, thank you for the opportunity. Just following up on the previous participant's question on margins, the hubs that we sort of commissioned in FY26, now that pathology revenues would have sort of started to trickle down, and these hubs would revert to our portfolio level pathology contribution of revenues. We don't foresee any margin dip in those hubs because of this, right?
So, Anshul, Raju here. Okay, we don't foresee any dip from these hub centers because 60 to 70% of our cost is coming from the fixed cost base. Okay, so most of these centers, as we announced in the previous calls, okay, they've already achieved the break-even. That means all of the fixed costs have been already absorbed. And as you know, our cost of metal consumption on blended basis is close to 11%. So your contribution is 89%. Okay, any further revenue in these hub centers from a pathology business side will directly flow to the EBITDA level. So we don't foresee any dip at the margins level because of the pathology revenues growing up in these hub centers.
Okay, yes, sir. So no dip in the hubs that we added in FY26, and in the current year, the hubs that will add, obviously on a largest base of network, the margin dip would not be expected in the range of what we sort of witnessed in Q126. Would that observation be correct?
So, Anshul, if you remember, in Q1, we had launched the 6 hubs, so all came at one point of time. But during this year, you would see CapEx being in a staggered and a phased manner. So we don't foresee, a significant impact on account of these hubs during the current year or any of the quarters.
Great, thanks for that clarification. Second question I had was on the land that we purchased in AP. This is no deviation from our strategy of leasing properties, right? This is just a one-off case wherein we're not able to secure a lease and hence we are buying the land.
Sure. So like we mentioned earlier, there are certain regions of interest that we would like to go in rest of AP, Telangana and Hyderabad, and keeping the requirements of the long lease and the infrastructure. Like we mentioned earlier, if we find a place that's suitable, and this is an area where we've been trying to open a center for the last almost 6 to 7 years. So when we found this piece of land, which is ideal in size and also in terms of location, is located in the medical hub of that particular region. We said it's one of its kind, but it's going to be a state-of-the-art hub center for Andhra.
Got it. And ma'am, this land would likely be purchased in the current year, and the 190 crore capex includes this acquisition cost?
Yes, it does. It does.
Great. Lovely. Second question that I had was on the wellness share, ma'am. Now, last year we did 14.8%, and this quarter itself we are at 14.8%. Would it be possible to sort of add some color on how we are able to sort of ramp or sort of crank up this lever? I have gone through the presentation, but any additional color on any specific age cohort that is sort of driving this, and is this a structural sort of lever that we, all of diagnostics operators have sort of.
Differentiated lever, I would say yes, more than structure. Like I said, pre-COVID times, we used to be around 8%. And with the awareness, more migration and lot of education in the tier 2 geographies itself. Now, if you see the 15%, some of it is actually contributing from the tier 2 geographies, which was not what we would see in the early on days. So this is that's also a reason why we do not basically have this process of upselling or pushing packages. So the number that you're seeing here, 15%, is pure wellness revenue coming in from customers who are wanting to come and avail one of these packages. So there's only two things that we do differentiated in this. Is one is the digital initiative that we continuously try to educate, and then you're seeing a lot of the newer hub centers get more advanced cardiac CTs. So what's happening is early on, the packages would probably end at an ultrasound, 2D echo, TMC. Now you are seeing packages go all the way from your basic urine blood investigations all the way up to whole body imaging. That could be in an MR, that could be in a CT. That is also the reason why you're seeing a little additional costing in Gachibowli center, because we've tried to work a little differently with the center in terms of the look and feel of the center, the experience itself, and also packaging it in ways where the packages go into multi-organ screening. So this is something that we will be taking forward into Bengaluru, Pune, rest of the geographies that we are, as we understand probably the requirements of the customers better.
Great, Leona. Just a follow-up on this. What would be the price point of these premium wellness packages for us at the portfolio level?
Again, like we said, we don't do deep discounting on this. Probably on an MRP, they would be a little lower than about 20% is the highest. So a average package of an angio would approximately range anywhere between, say, 8 to 10,000 rupees.
And with improving share of wellness, our patient level or test level realizations will only inch upwards.
Yes, it will.
Great. That's it from me. Thank you so much and all the best for the remainder of the year.
Thanks, Asha.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1 on your touchtone. Next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning, everyone. Ma'am, firstly, if I look at Bangalore, it's been almost a year since you entered the market. Can you talk about how the competitive landscape has been, both on pathology as well as radiology? And if you can comment on your learnings over the last 1 year, and how do you expect the market to play out over the next 3 to 5 years?
So competitive landscape, Alankar, I think is more or less the same across most of the geographies that we operate in. And Bangalore has been no different, but Bangalore keeping the limitations of probably the difficulties of the city itself in terms of your traffic, logistics. You've not seen large brands grow in Bangalore where a single brand has about 30, 40 centers. So they are locality specific chains that have 5 to 6 centers concentrated in one cluster. So to understand the market better, like we mentioned earlier, we chose 2 geographies since we were new to the market to understand customer requirements, one in HSR layout on one corner of the city and Yelhanka on the other corner of the city. Both of them exceeded our expectations, broke even in the first year itself. Now we said, keeping the growth of Bangalore being our we will probably treat Karnataka as our next core geography after rest of AP Telangana. Keeping that growth and the plan in mind, we said we require a fully automated lab first to create a hub, to create the infrastructure before we go on expanding and adding on new centers. And that is when JP Nagar has happened with this 30 crore capex investment, which is again like a state-of-the-art hub center like Panchagutta and Hyderabad for us in Bangalore. JP Nagar Center has infrastructure which is first of its kind, not only to Karnataka, but many states. So the 3 Tesla Omega MR is the first in Bangalore, and the digital PET with a cardiac CT is also the second. Only a hospital has it and the first diagnostic to have it there. Now there are 2 things here. To add to the wellness, full body imaging in an MR and the cardiac CT gives you the full body imaging in CT. So they are not only going to be serving as prescription-based diagnostic facilities, but also probably inching towards wellness there. Now next, once the lab settles and gets accredited, you will see a lot more hubs and spokes coming up in Bangalore itself. And then we start looking at home collection. So this is basically setting up Bangalore for the next 5-year journey. That is where we see ourselves on Bangalore.
That's pretty helpful, ma'am. Just one follow-up there would be, if I compare the different locations you are present in, the different cities, I mean, would you say that Bangalore in terms of the overall market dynamics is more closer to Hyderabad than any of the other cities you are present in? And maybe another one there is, if you can compare and contrast Hyderabad and Bangalore in particular. I mean, does Bangalore, apart from the micro market point which you mentioned, can it be as big as Hyderabad for us conceptually if I look at the next, say, 10 to 15 years?
Alanka, definitely Bangalore and Hyderabad are very correlated to each other, especially because I would say the southern part of India. So initially when we entered Maharashtra with the Pune acquisition, we said we needed a little more time than the guidance that we had given because it is a new market and we are trying to understand the needs of that localized market. But if you look at South India per se, like we mentioned earlier, the way the markets operate, whether it is probably Tamil Nadu, Kerala, Karnataka, Andhra, Telangana, will all be similar. Because we tend to probably, like I mentioned earlier, for a simple headache, we go and see a super specialist and try to finish it in the first instance itself instead of waiting it out. And also a lot of, like you see the wellness bit growing in tier 2 geographies, that is because of the basic awareness among the clientele and the importance that is given towards healthcare. So tier 2 geographies, the hubs are also ramping up because of availability of these super specialists across these tier 2 geographies. Look at Gulbarga in Karnataka. It's comparable to say a Nellore or a Kurnool for us in Hyderabad geography. So they are definitely similar. If you say what do you look at for Vijaya in the next 10 to 15 years, it's going to be definitely eastern part of India and Karnataka. Both of these are probably enough for the next 7 to 8 year plan to go as deep as Hyderabad, and these 3 states will definitely give us the numbers that all of us would be looking at.
That's very helpful, ma'am. And maybe one final question from my side is on Pune. I mean, it's been more than 2.5 years since we entered Pune via the acquisition of PH. How should we look at your plans for Pune? I mean, if you can again compare versus what the expectations from the market were at the time of the acquisition versus how things have played out. Because if you look at the contribution from Pune has been relatively flat at about 6% for us since then. Of course, we have grown in other markets as well, expanded in other markets as well. But conceptually, are you thinking about Pune slightly differently than how you were thinking about it 2.5 years back?
Definitely, I'm looking at it differently, but I'm not probably looking at it differently in terms of growth. Probably the strategy and the play that we would do in the other geographies would be a little bit differentiated when it comes to Pune. Like we mentioned earlier, we did take our time to settle things, structure it out, put things in place, processes in place. And like we mentioned, you'll be seeing these 9 hubs coming up. You will also see a large hub coming up in Pune. That is basically to create the infrastructure that was required because of capacity issues in the existing PH centers. So this fully automated lab, again, state-of-the-art center that will come up in Pune will again align us to open a lot more spokes, collection centers, align wellness and home collection there. Because today that probably the back-end facility was not available with PH, and we also had the constraint of finding the right location. You will see that happen this year itself, in this financial year, which will show us an inching towards the growth. We've also performed well in Pune. We've shown an 18% growth, and the new centers are also ramping up. We've also added one spoke in Kharadi as we speak in July. So we definitely see Pune growing, but probably a little bit differently when you compare your Eastern India and your rest of AP, Telangana.
Got it, ma'am. That's helpful. That's it from my side. Thank you.
Thanks, Alanga.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. We have our next question from the line of Abin Benny from JM Financial Ltd. Please go ahead.
Thank you. Hope I'm audible. My first question is regarding the growth, ma'am. So growth has remained about 20% despite a higher base. Possibly how much of this is attributable to the market share gains versus the industry growth? And like if you could give some color on the industry aspect going on right now, and along with that, if you could give some color on the competitive intensity that has changed in any of your key markets in the last 6 to 10, 15 months.
So, Abhin, if you look at our growth, okay, since we are a B2C focused integrated diagnostic chain, we always have been outperforming the growth of the industry. And the industry was giving close to 13 to 14% growth. We used to give at least 4 to 5% higher growth than the industry. The reason is mainly the strength of our business model, which is focused on B2C and then focused on high quality reporting, accurate reporting, plus the high-end imaging equipment that we introduce across our hub centers. Okay, be it a tier 2 location or be it a metro geography. Okay, so that is helping us to gain the market share quarter on quarter and undertook consistently across the geography. Okay, that's the main reason.
And Abhin, if you also look at the current quarter, existing spokes in our core geography, including Hyderabad, whose vintage is more than 5 years, they have grown at higher double digits. So it indirectly means that what we have been communicating since several quarters, that there has been a gain in the market share, and that shift, although gradual, happening from unorganized to organized, that is playing out. But quantifying the market share, etc., would be difficult. Okay, so we don't have those numbers.
No worries. Thank you for that. Second question is regarding the wellness program. So are corporates increasing the frequency of the wellness employed programs, or is the growth largely driven by retail customers? And what categories of the wellness packages are probably currently witnessing the strongest demand growth?
So it's a mix of both retail as well as corporate. And apart from the seasonal packages, the lifestyle packages are showing strong growth, for us, be it cardiac, etc. So those packages are, showing strong growth for us. And this is not just restricted to tier 1, even tier 2 cities are showing higher growth. So that trend has been a surprise for us.
Understood. Thank you. I'll get back in touch. Thanks.
Thank you. We have our next question from the line of Bharat Seth from Quest Investments. Please go ahead.
Hi, thanks for the opportunity. Just to understand, on this our differentiated approach in tier 2, tier 3 city. So if you can give a little more color. And second thing, on digital space, that when you are talking, so how do we really using AI that we, pathology as well as other diagnostic combining and giving a better output in terms of the patient from wellness point of view?
Bharat? Yeah, so when it comes to AI, especially in the wellness packages, there is a smart report that we generate for all of our lifestyle packages that Dhiren was mentioning. So these are more customized towards the patient's history, details, age, and these are specific to that customer. So all of the lifestyle packages across Vijaya, along with a traditional report, also get a digital AI smart report. When it comes to reporting, there are certain modalities, and basically AI is again organ-based in radiology. We cannot just take and pick and implement any AI. It needs testing, it needs validation, it needs certification before we can use it for clinical use. So there are few of these that we use for our KUB cases, chest cases, breast cases. So as and when our team of 400 plus radiologists evaluate and then decide that this can be put for clinical use, these are patched to our PAC systems and it is an integrated report that goes out. Likewise with pathology. When it comes to digital
Sorry, ma'am. Coming back to, on that same part. So how is the acceptance, vis-a-vis other player, and where do we stand in this whole stake, on wellness, when you are saying that combining, whenever we'll be able to...
Even without an AI bit of it, Bharat, if we go back to your basic wellness, would not be right. So if you look at a wellness package in any integrated player, just not Vijaya, so basically you're looking at everything from blood work to an ECG to advanced cardiac imaging to radiology. So if I'm a smoker, probably you're covering your lungs through a chest X-ray. If I have a liver issue, I'm covering it through your ultrasound. If I'm a lady above 45 years, there is women's wellness, which covers your pap smear and liquid cytology with a mammography. And if I'm a cardiac patient, then it goes through your cardiologist. Again, Vijaya only has qualified DM cardiologists who perform these tests, unlike other centers. So a wellness integrated center probably will have all this covered versus a pure pathology health package, which would include probably in number you would look at, say, 30 to 70 tests being performed. But is it holistic and complete in nature? Now that depends on the requirements and needs of the customer. This awareness has basically created that wellness bit to inch. So if I probably go through what is my requirement in a year and everything is normal, you would repeat it only once in 2 years. Otherwise, probably a year. Now this is again both from corporate side and a walk-in customer base. So when a corporate customer walks in and goes through this experience, it's only fair to say that he would want his family to experience all of this. So with one corporate client, you also tend to have another 2 or 3 walk-ins who would want to come back and get a full health package done.
And is it really adding, inching up, in our overall revenue pie?
It is looking like that in your numbers. For us, operationally, it is definitely increasing and it is adding more value also. And that is the reason why we've also relooked and advanced the wellness packages into more advancement into some of these also, where age group of people is above 60 to 70. We've brought in an MRI brain into a screening protocol to rule out dementia, to rule out a lot of other things. So, and in people, say, between 40 to 55 years, we've brought in a lot of advanced cardiac imaging with cardiac angios. There is a separate profiling for liver patients with the liver elastography. So these are based on the needs and requirements of the customer.
Okay, great. And now coming to this tier 2, tier 3 city, if you can give.
So tier 2 and tier 3 cities are likewise, Bharat. So if you look at Rajahmundry, why I'm picking it is Kakinada is a larger geography compared to Rajahmundry. We chose Rajahmundry as a geography to understand interiors of Andhra. When we entered Rajahmundry, we said we would like to give ourselves 3 to 4 months extra to break even. We broke even in the first 9th month itself. Again, Rajahmundry, which gave us a very pleasant surprise, was in the wellness segment. So Rajahmundry, being the smallest town in the that section, today has a lot of wellness packages coming in, almost from 150 to 200 kilometers surrounding it. And
Great.
Probably keeping Rajahmundry in mind is why we have looked at other geographies and also inching towards wanting to buy this land in another tier 2 geography and create a state-of-the-art hub there. So all of these tier 2 geographies medically, not just with the diagnostics, in terms of super specialists, specialists moving back, large hospitals coming up in these geographies. Early on, you would see customers traveling to nearby cities is gradually decreasing year on year. And all of this customer base is being treated, diagnosed, taken care in that geography itself. That is the probably examples for you to understand better would be Tirupati, Kurnool, Nizamabad, Khammam, all of these centers.
So in your vision, of 5 to 7 years, where do we see, our mix kind of a thing, if we can give little more color?
So next, probably I'm saying up to 10 years, we would replicate what we have mastered in the eastern part of India and in Karnataka as a whole, be as dense as possible, create the same dense cluster model of a hub and spoke, increase our home collection and wellness segment. At the same time, be pioneers in what we do, the best in imaging, best in pathology.
Okay. Thank you and all the best, ma'am.
Thank you.
Thank you. We have our next question from the line of Dr. Karthik Bane from Bajaj Life. Please go ahead.
Hello. Thank you for the opportunity. A lot of AI-based companies are on the lookout for healthcare data. Do we have any possibility of monetizing the healthcare data that we accumulate? And first of all, is it ethical? And what would be the regulatory things that we have to undergo if we have to monetize such a data?
So Karthik, we're on the same page as you. We have a gold mine of data, but today we do not know in terms of compliance on what can be done, cannot be done. We will engage the right agencies, and after we get what is required as per compliance, probably plan it out accordingly. But as of today, as Vijaya as a company, we do not share this data. We have a very strict privacy policy in place, and this data is not being shared with anyone.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have a follow-up question from the line of Siddhant from Tusk Investments. Please go ahead.
Yeah. Hello. Yeah, my follow-up question is, what was the mature center growth in Q1? And in terms of absolute EBITDA loss from the new center, could you just highlight what was the absolute EBITDA loss from the new centers?
So the mature centers, grew at 16%, and the new centers, the revenue contribution from them was 6 to 6.5% for the quarter year on year. And in terms of the burn, the 3 to 4 hubs which have not reached, break even, which we have launched, 1 year back, or you can say a couple of hubs which we launched in December. The burn is roughly about 0.5% of our top line. But overall, if you compare all the 10 hubs together, there is no burn as such, because majority of the hubs have achieved break-even.
Okay, so basically you're talking about just 1 or 2 crores of EBITDA loss for this quarter?
Less than 1 crore.
Okay, got it. Thank you so much.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our next question from the line of Amit Chalke from JM Financial Ltd. Please go ahead. Amit, are you there?
Yeah, sorry, I was on mute. Thank you for taking my question. I have 2 questions. First, a broader question basically on Vijaya's growth strategy. So, for last few years, let's say 2 years before, we have been consistently growing organically in Hyderabad cluster, and that was a proven model. investors were always concerned that Vijaya has done it in the Hyderabad cluster. How they will perform outside Hyderabad or the Andhra cluster. So now over last 1 or 2 years, like the way the performance has been for the last 10 hubs which we have opened up. Now we want to open up 9 more hubs this year. So it looks like that we have found a model to grow outside Hyderabad and Andhra region as well. So our expansion focus from here would be keep growing because of this confidence, and should we expect a 20% growth could be a new normal for Vijaya?
So, Amay, as you said, okay, we have been growing consistently, okay, across the geographies and including like Hyderabad, which is a mature cluster, okay, without even adding any hubs in the last couple of years. Okay, I'm happy to state that we grew at 17% in Hyderabad, okay, which constitutes close to like, okay, 67% of revenue pie from the overall revenue contribution for us. And also, apart from Hyderabad, even the tier 2 locations that we launched in the last, okay, 2 to 3 years, okay, like what ma'am was explaining, like Rajahmundry, Tirupati, Khammam, okay, and also places like Krishnanagar in West Bengal, etc., have outperformed, and in fact they surprised us, okay, with even break-evens getting achieved in just, okay, 2 quarters in most of these locations, okay, and also, okay, the Bangalore, okay, being a metro, both the hubs, okay, achieved break-even as per our expectations, and they're doing extremely good, okay. The reason is simple, okay, focus on B2C, and then give a superior experience from an infrastructure perspective compared to other standalone players, and also invest on the high-end radiology equipment, okay, which is generally not there in other players. Okay, this is the main differentiation, okay, which is pulling the higher footfall across our Vijaya network. So the objective is to create such a dense network across the 3 new tier 2 locations, that is Pune, Bangalore, and Kolkata. If you see in the last year, we added close to 9 hub centers across these 3 metros, and in the next 12 months, we're going to add another 6 out of the 9 that we mentioned. So 9 plus 6, we're going to add like 15 hub centers across these 3 new metro markets where we are planning to go deeper. Okay, so that's the plan, Amay. So we are fairly confident of this growth. And coming to the current year growth, as you know, Q1 was extremely good. We delivered 23% growth. So we're fairly confident of, okay, giving high double-digit growth for FY27. Okay, when we talk about, okay, mid to long-term growth, okay, like a 3 to 5 years growth on a sustainable basis, okay, we believe, okay, achieving 15%, okay, is easy. Okay, so that is achievable, no doubt.
Sure. Thank you. The second question I have on some divergence on the margin side. So standalone pathology typically have been operating at the lower margin than Vijaya, which is a combined entity. For us, the pathology share, although has been growing or inching upwards, at the same time the margins are also expanding. So will it be it will be helpful if you can explain this divergence.
No, when you look at, okay, pure pathology players, okay, their B2B contribution is generally higher than the B2C. Okay, so what I think is that most of the peer group has close to like 25 to 30% of their business coming from B2B. Okay, where the prices are at much discount compared to B2C. Okay, that's one of the reasons why Vijaya on a consolidated basis we enjoy higher margins compared to a pure pathology business. That is one. And then second thing is, since we have advantage of giving comprehensive, okay, testimony including radiology, the number of tests that we perform is higher than the other peer group which are catering only to pathology. Just to give a number to that, okay, it's close to like a 3.7 tests that we do for every patient who is walking into our network, okay, as compared to 2.5 to 3 tests that a typical pathology chain does. So that's also helping us to gain a higher, okay, wallet share from a customer, which is coming to close to like 1,860 rupees if you notice, okay, for a Vijaya customer, as compared to a pure pathology chain where you get close to like a 900 into 950 rupees per customer because of pure pathology testing ability.
So what you're basically saying, that traditionally our margins are higher compared to standalone pathology player, even for pathology, because of the higher realization per patient.
Yes.
Is it right?
Yes.
Okay.
Absolutely. Initially also, our margins being integrated in B2C focus because of two reasons were always higher than a standalone pathology player from the beginning.
Got it. Sure, I will join back. Thank you so much.
Thank you, Amit. Thank you.
Thank you. We have our next question from the line of Jyotish Vijayan from Mood Financial Services. Please go ahead.
Hello, am I audible?
Yes, we can hear you.
Okay. Good morning. Thank you, team. Thanks for the opportunity. So my first question is on the pricing growth side. So generally, we see in the diagnostic industry generally a limited pricing growth. So have you taken any price hike over the last 1 to 2 years? And what is your pricing strategy going forward, considering the inflation and the competition rises?
So the last price hike which we had taken was in the month of June 2025, where it was restricted to Hyderabad across correct tests. Okay. Post that we haven't taken any price hike. Obviously post Q2 Q3 we will reassess our pricing strategy and decide based on internal assessment.
Okay. So, and my second question is from the competition side. So, as of now, there is some competition arising from the organized chains as well as the hospital-based diagnostic lab. So, are you witnessing any change in the competitive intensity across your key markets, particularly in the Telangana, Andhra Pradesh, and Karnataka?
So, if I were to speak about Hyderabad, if you look at, the top 3 players, the second and the third best diagnostic centers are smartly deploying their capital outside of Hyderabad because Vijaya has already, greater market share here. So we aren't witnessing a strong competitive intensity in terms of the network expansion from the organized players. Okay. In Hyderabad and in rest of AP and Telangana as well. There are obviously standalone players, there, but none of them, has, a large integrated center. And the way we have been able to, for example, in Vizag, we have added 1 spoke, and in the coming couple of months we'll be adding more spokes. So the kind of network expansion that we've been able to do, we've not seen the competition doing it at the same intensity.
Okay, got it. Yeah. Thank you. Thank you so much. I will join the queue.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question may press star and 1 on your touch tone phone. A reminder to all participants, if you have any questions, you may press star and 1. Anyone who wishes to ask a question may press star and 1. As there are no further questions of the day, I now hand the conference over to the management for closing comments.
Yeah. Thank you all for joining the call. Should you have any further queries, please feel free to reach out. Thank you.
Thank you. On behalf of JM Financial Ltd, that concludes the conference. Thank you for joining us, and you may now disconnect your line.